It's Saturday, July 18th. Welcome to a new episode of Bazaar. I'm your host Sid, and joining me in the studio today is Megha Sareen. Megha, it's a pleasure to have you on the show.
Hi, Sid. The pleasure is all mine. Thanks for inviting me to the show.
Yeah, so for people who don't know, Megha was the first one to float the idea of a podcast. So, this is basically something that we had planned to do for a long time, and I am really excited that we are finally doing this. So, just fingers crossed, and let's see how this goes.
Thanks a lot, Siddharth. But then I think I should thank you as well because you are the one who brought it into reality.
I look forward to have you more on the show. And to just begin the show, we were talking about how this pandemic has really been crazy for retail investors, but legendary investors like Warren Buffett, Bill Ackman, and Rakesh Jhunjhunwala were also not spared. They took the brunt of the pandemic and it affected everyone, not only retail investors. But before we go deep into that, I want to talk about the investing strategy of Warren Buffett. And the reason I want to do that is because, a lot of analysts have come out and criticized Buffett and the way that he dealt with the entire pandemic. And some say that Buffett's strategy might be outdated and that he missed out the opportunity to make the most out of this. So, before we draw any conclusions, let's first understand what is the essence of Buffett's investing strategy and whether it holds against the test of time.
Siddharth, actually, to start with, I just want to say that markets right now are far away from reality. Be it the March bloodbath on the street or the biggest rally of all the time. During March, it was driven by the fear, I would say, and now it is by the fact that it is not going to be that bad. I think Warren Buffett has been quite conservative. We cannot deny this, and has been quite panned by the analysts for his inactivity. See, coronavirus has redefined uncertainty for everybody, which includes him as well. So I don't think such criticism is anyhow justified.
He's a
So the
human after
situation,
all. I mean,
yeah, it is very human. Actually, the best way to put it is that he is human. The behavior was very much human. So I think the situation was unprecedented, and like Warren Buffett said, we haven't seen times like this, but we have seen times tougher than this. And I believe that any inactivity during such times cannot be perceived as pessimism, and not at all as a denial of the fact that long run is positive.
yeah, I agree. And basically, this is just 1 year that, he did not capitalize the insane run that the market is witnessing. But you cannot forget that, for the past 50 years, this guy has been crushing the market. And before we dive deeper into, what makes him, I think it's very important to understand that, the reason why he's so successful is because the rate at which he consumes financial data is really amazing. He's a monster. I mean, he's reading 10Ks,
Yeah.
SEC filings, earnings call transcripts of dozens of companies, and just his sheer focus is what differentiates him. Because you see, like when I want to learn about a company, what do? I read about its annual report, or I do a little bit of industry research. That's it. I mean, I don't have more focus than that. But what does Warren Buffett do? He reads the company's annual report for the past 30 years. All right, 30 years. He also reads about the annual reports of all the competitors and of the companies in a completely different industry. So this guy has been consuming data on such a massive level, and this is what differentiates him.
And you know what? Not everybody can do that on a regular basis. I cannot imagine myself like doing all these things daily. And
Yeah.
actually going about his strategy, see, Warren Buffett has always advocated value investing. He has always
Yeah.
relied on the fundamentals and focusing on low-levered companies and the companies which show high earning growth. He has always said that people should not buy stocks, they should buy companies.
Mm, that's right.
And he doesn't pay attention to daily stock prices and see what the analysts are saying. He just cares that whether the price is below its intrinsic value and is it growing and is it actually making money. This can be actually justified by his recent offloading of airline shares.
Yeah, I mean he did lose a lot of money on that though, and
Yeah,
so that was a definitive decision actually.
true. And right now, see, retail investors like us are I'm not targeting anybody, but currently retail investors are entirely investing on basis of price action. completely on basis of price action in the market, which is far away from what Warren Buffett has ever preached. But now one thing we need to consider here is that Warren Buffett is not an investor. He is not at all an investor. He's an owner. See, investors are people like us, people like you and me who go and put a part of their savings into mutual funds or stocks with little bit of research we do. What we call research.
Yeah,
Where does Warren Buffett, he buys enough shares to have like a say in the board of the company, to actually see how the company is functioning and to actually participate in it. Whether or not he participates, but he has a right to participate. And when you
yeah.
invest this kind of money, it takes time to analyze, and even more during such uncertain times.
Exactly. I mean, see, we talked about how much research he does. So that doesn't mean that he's reading everything. He knows what he wants to look for. He's gotten so good at this that he just when he opens the annual report, he knows exactly what page he needs to go. So I mean, whatever analysts say, he is still my all-time favorite investor. And Warren Buffett is the John Wick of the investing world, in my opinion.
Okay, so that I didn't watch the movie, but I'm sure that that's the right analogy. And
Yeah.
actually, we should talk about something different now. That he did put his money to work very recently. Am I right?
Yeah.
So why don't you tell something about that?
Okay, all right. So he didn't put his money to work for the past 3 months or in the pandemic, but in the past week or so, there was news that they entered into a deal buying Dominion Energy's natural gas pipeline and storage assets. So, Berkshire Hathaway has this large cash pile of $137 billion. And I think the entire investing community is just every year they're just eagerly waiting where this money is going to be deployed and how Buffett is going to use that money. So they bought Dominion Energy's natural gas pipeline and storage assets, not the company, but that asset of that company. And to put things into perspective, Berkshire Hathaway already has a very strong energy portfolio, and this investment complements that. Plus, this perfectly fits Buffett's criteria because the business offers a regular cash flow and it is very easy to predict. And analysts predict that the acquired assets have an EBIT of around $1 billion. So that means that Buffett didn't overpay for it and he got a reasonable price. So that is what he looks for. And that's the reason why he actually cracked this deal.
Right. But then, if you include the Dominion Energy deal, I think that Berkshire Hathaway made a few days back, Warren Buffett has been really quiet in the past 3 months. He has lost a lot of money though. And Berkshire Hathaway posted a $50 billion Q1 loss, most of which it was unrealized loss, which in Buffett's language is just a meaningless number on the paper.
Yeah.
Buffett personally, he took a $19 billion hit on to his net worth. However, he's still he's the seventh richest man in the world with a net worth of $70 billion still. And however, Buffett he did sell during the pandemic, which is actually against his buy and hold forever strategy. And I would actually want to add that he has never said that hold it forever. Analysts are always preaching hold it forever. He has never said it. He only holds the investment till the time it is making money for him, and that is totally justified by his airline's decisions. So he sold the entire stake in the four airline companies and booked a loss of around $7 billion. Moreover, he has been the biggest bear of the airline industry, and it just didn't work out for him.
Yeah, I mean, look, if we go back into the 1970s or the 1980s, Buffett was always, he came out and said that, he would never put his money in an airline stock. I don't know what changed in the past 5 or 6 years. Maybe it was not his decision because he has an investing team also that makes decisions. So we don't really know, whether this was Buffett's own decision or someone else made this decision, but it just didn't work out for him. And I don't think that he's gonna put money in airlines again, given how bad the situation is. And
And, and for the airline industry, I totally agree with the decision. My my arguments or my opinions matter, but I still believe that airline as an industry has always been very capital intensive because they're not going out of business, right? Airlines
yeah,
are very important for any economy, so the industry has to survive. Maybe through government aids, it will survive, but
it's
stable.
probably not the best investment out there. So
Yes, right. Yes,
yeah.
it is just going to survive but not thrive.
Yeah,
So
that's really a good way to put it. So just making a pivot here. So we've talked about Warren Buffett, but in the beginning of the show, we were also talking about Bill Ackman and Rakesh Jhunjhunwala. How did they get affected? But there is one name that doesn't make the headlines, and a lot of people don't know about this person. He is an investor by the name of Seth Klarman, and according to a New York Times article, he's the most successful and influential investor that you've probably never heard of. And to give you a little bit of perspective, Clairman co-founded a Boston-based hedge fund known as Baupast Group, in which he manages around $32 billion dollars in AUM. This is very interesting. He's also called the Oracle of Boston because his investment strategies are very similar with those of Warren Buffett. Clairman's stock portfolio, however, declined by a 26% during the pandemic because no one was insulated from the crash that happened in March. But that did not stop him, and he took sizable positions into Facebook and Alphabet. They also increased their holdings in HP and eBay. And what's interesting is that this guy already had the vision, and they were already prepared for a downturn. In one of the reports that I read, Claremont said that around 30% of Bopper's total portfolio was cash at the end of December. So that's how Seth Klarman performed during the pandemic.
all right, that's very interesting. I guess it does pay to have a great vision. But back here in India, we cannot forget to talk about our big bull, Mr. Jhunjhunwala. I think recently I read an article about him and ended up in splits reading what he said in an interview about trading and investing. And he was like that trading and investing are like mistress and wife. You can manage them both. And see, I know maybe how notorious this sounds, but this cannot be denied, right? Rakesh Jhunjhunwala is one person who has been like extremely optimistic. And in his words, the mother of all bull markets have started. He is the one person who actually believes in Indian equities. He has
Hmm.
that faith in the Indian economy. He's a trader and investor and adopts entirely different approaches for both. I believe as a trader, he's realistic and he himself says this and always keeping his eyes on the price action. Whereas an investor, he looks at the bigger picture. This can be a good strategy for us as well.
Yeah, I mean,
We
for
cannot mix trading and investing, right? We cannot have the same side for both.
exactly. And you told me that this guy, he has two different segments in his brain. So one is for trading, one is for investing,
Yeah.
and he keeps them, so he manages it so well. This is one of the reasons why he's so successful. But you know this guy, I've never heard anything bad from him about the Indian economy. He's always so
True,
positive.
true.
So that helps lift the market sentiment, I would say.
Actually, people like us, we look up to him.
Yeah, that's true. He's the most influential investor in India, and if he's saying that a big bull run ahead is there for us, I don't think he's joking. And we have already seen the market rise at a crazy rate. And
Actually.
but I still feel that we need solid earnings growth to justify the current valuation. That needs to happen before we can actually
Even I believe the valuations are not justified right now, but I think
yeah.
markets are very forward-looking. So maybe it can be justified by the fact that recovery is going to be really fast and the future is very positive.
That's true. It'll be very interesting. But if I had to break it down to a single investor who is having a party at the end of March, it is Bill Ackman. Let me tell you what he did. He started buying credit default swaps. All right. It's a very
Okay.
technical sort of insurance on his investments. And he started buying these swaps in January and February, and he paid around $27 million for them. All right, we didn't know how the pandemic was gonna pan out. By March, when the craziness began, these credit default swaps were worth somewhere in the neighborhood of $2.6 billion. And Bill's hedge fund Pershing Square Capital then liquidated those positions and used that money to increase stakes in companies like Hilton Hotels, Berkshire Hathaway, Restaurant Brands, Starbucks, and a few more. And what's interesting is that while every other fund out there in the market was getting battered, Ackman's fund delivered a 7.9% gain in the month of March, which is just staggering to me. And this is how Bill Ackman invests. He's very bold. He does the opposite of what everyone else is doing, and he does a lot of research, and he's just very brave when he makes his investments. This guy, he made a lot of money apart from Mukesh Ambani in India. I think if you were to look into the US markets, I think Bill Ackman is the guy who is really having a party.
All right.
So to wrap this up, I think the most important question is that, like, okay, legends aside, we cannot compete with the legendary investors. But as a retail investor, what do you think? Should be a retail investor's investing strategy in this pandemic, like going forward. What should be the strategy or some action points that retail investors could look into?
That I think that when it comes to following the footsteps of such legendary investors, I think they can help in making a good investment decision. But our strategy should not be entirely based on it. And I think the coming time is all about innovations, and consumer demands are changing so fast. You never know when a business becomes irrelevant or rather less attractive in such a dynamic environment. And the best example I can think of is Oyo.
Oh yeah,
Right.
yeah.
So, unlike Warren Buffett's strategy of long term investing, I don't think the investment span of 10-15 years is exciting anymore. But then, in such a precarious time, I completely rely on fundamentals. And as a retail investor, I've always focused majorly on 3-4 sectors that I understand and I like reading about. It is
Hmm.
very important to know what is going on. At the end of the day, I believe you cannot have it all. You
Correct.
cannot just have it all. So prioritization is very important. So just going and wandering around and reading about everything and investing in every sector, I think prioritization is very important. You can just keep on increasing your understanding of the sectors over time, but start with 3-4 sectors. And by fundamentals, I mean focus on the company with strong leadership, because at the end of the day, it is people who make the companies, not the company making the people. People who are actually governing the company, who are actually steering the company during such pandemic is very important. So the strong leadership, less debt. The companies which are less leveraged are at a better
Hmm.
position right now, and a robust business model and the strength of demand for the products during the post-COVID world. I think the businesses where the demand of the product post-COVID world is going to be good. I think those businesses are a good pick right now. And one person should hold the stock only till the time it matches the reason you bought it for.
Definitely, definitely. And I agree about following a bottoms up approach, looking for strong leadership and, less leverage companies that have a robust business model, because I think, these companies are always going to do well, relatively better compared to other companies. And I really like this one factor that you mentioned, about how we have to also look at the strength of the demand for its product in a post COVID world, because this is
True.
something that, investors have to keep in mind, because a lot of companies like Oyo you mentioned, and companies in hospitality, tourism, all those companies are going to be very affected. So it makes sense, if you are very cautious before you invest in such companies, and it makes sense to look for companies with strong leadership. I mean, that's one thing that is very important, the direction that the company is taking. And personally, if I think about the time between March and April, when the markets were in a free fall. I think it was March 25th or something when Nifty fell 10%. Just minutes after the trading began and the markets were halted. 45 minutes later, Nifty hit another
That
lower
was
circuit.
that was one of a kind thing I've ever
Yeah.
witnessed in my life. That was one of a kind thing.
I have a very hazy memory of the entire event, but if you were a retail investor, I think for a split second you really were thinking that this is the end of the market. I mean that
Very
this
true.
is the end, and
Yes.
I also stopped looking at my portfolio back in March and April. Only recently I've started looking back at my portfolio. So it's really been a very it's been a roller coaster ride for the investing community, and it is something that we'll always remember for the time that comes. We'll always remember this period as a learning experience, in my opinion.
Yes. I think COVID-19 will definitely have a lasting psychological impact. I totally agree with you on that. And this will actually reflect to consumer demand.
Hmm.
So I think right now the companies should not be judged on the basis of a quarter or a 6 month performance. The perspective should be for next 2 3 years. And at the end of the day, I don't think maybe some of the stocks which are fundamentally strong are not performing that well right now, maybe based on their Q1, or analysts are not very positive about their performance for this year.
Hmm.
But the perspective should be for a longer period. And at the end of the day, Siddharth, Reliances and Wipros of the world are not going to shut their shops.
That's, yeah.
So we need to keep such things in mind. And in the entire scenario, I see telecom as a winner, and that is quite evident from the kind of investment Geo has been receiving. See, now I would actually sum up by saying that nobody knows what direction will the market take now. But I still believe it's worth the risk, provided one is vigilant. I believe one should invest. If you are an investor, you have been investing for a long time, or maybe even if you've started few year back, or you've very recently, you should not miss it. Invest, keep your strategy in place, and be vigilant. Be very fast to change. You just cannot
That's,
stick to a strategy. You should be very quick to change it. So
mhm.
I think people should keep their faith intact in the markets and the economy.
I agree. I agree with you. I mean, this point that you mentioned about change, I think that is something that, you'll learn from your own experience. It is
Yes.
something that, you have to slowly tweak, you have to slowly, just learn from your losses also. I think, failure early on, if you fail with your investments, I think it's a very good thing that happens because, once you fail, you understand that, you are not unbreakable. Everyone makes mistakes, and the sooner that you learn from them, I think, the more money that you will make in the market. So as a retail investor, I would suggest that, you keep on learning, and, place the most importance on your own experience instead of just blindly following what others are doing. Okay, learn from them, but put more importance on your own experience, because, every person has a different strategy that works best for them, and it's your own experience that will really help you. So my personal experience, if you would ask me, has been that if you really want to make money in the market, you just need two things which are really important: buying at the right price, and then having the patience to hold on to those investments. And
Yes,
the,
exactly.
the longer your money is in the market, the greater are the chances of you generating above average returns. So we don't know how the stock is going to go up or down. We cannot predict what's going to happen in the future, but the longer your money is in the market, the more chances you have of generating greater returns. And so if you had to take just one piece of advice from this podcast, I would say be fearful when others are greedy, and be greedy when others are fearful.
Yes, very, very, very true. I totally agree with you to that.
Yeah, so Mega, again, it was a pleasure to have you on the show, and I remember you mentioning something about, sector analysis. So I think
Yes.
I would love to have you back on the show, and maybe we can even have a segment which talks about different sectors. I think it's a very good thing that, we could do together. So I'm looking forward to more such wonderful conversations with you. I had a fun time, and I'm really happy that we finally were able to do this. So just looking forward to more conversations with you.
Thank you, Siddharth. Thank you so much. Even I am looking forward to all the things we have thought and actually manifesting them.
Guys, that does it for today's episode of Bazaar. People on the show may have certain recommendations to buy or sell securities, but don't buy or sell based on what you hear. Do your own research, dive deep into the annual reports and the company reports before you make any informed decision. Do let us know what you think of the show. It helps us to grow and to, make it more interesting. Our email address is thebazaarpodcast@gmail.com. We can also answer your questions someday. So do reach out to us. Have a fun weekend. We will see you next week.